Good morning, Miss Schneider. How you doing?
I'm doing great. Brent, I just saw your chat. Sorry about that. I
Oh,
was
you are totally fine. It is very nice to see you twice in 2 days. You were on STN last night talking to us about commodities, but I think this morning we're going to stick more with equities, huh?
Yeah, definitely. And I know I've been listening to you all, and I know how chaotic obviously everything is. And we're very light in terms of positions. We're still in a lot of cash. But I have seen potential, forgetting about all the news and the tariff situation. I'm seeing a little bit of potential, particularly in the indices. If you're looking at Qs and if you're looking at the S&P, if Nasdaq gets over 19,000, I might get a little bit more optimistic. If the SPY can get over, the S&P 500 can get over 5,400, same kind of thing. So that's kind of, I'm waiting. I'm waiting for something to give me a really good technical reason with an absolute bottom line support level to hold before I start piling back in.
Mish, what I think you're not the only person waiting here. Like this is the issue that the markets maybe have is that there's a lot of people, a lot of excellent traders on Twitter. I've talked about Brian Shannon before and obviously Christian Fromhertz that are a little bit, when stocks are trading down below their 200-day moving averages, they're not really all that keen to just come in here and start calling the dip on everything. So there's so many traders who have, read the books like How to Make Money in Stocks. And obviously, these are momentum type strategies. The market doesn't have any momentum right now. So there's so many traders probably just sitting out here. How do we get to that point where the momentum comes back in? Like who's going to be the hero and say, this is enough, I'm buying?
Well, I hope that the three of you and me are part of the hero pack. But no, actually, I read today Goldman Sachs put out a report that retail space is buying every dip. Even though you're talking to the ones who are more experienced and obviously probably a lot more cooler in terms of waiting for particular signs, people still think that this is a buy the dip type of scenario. And so some will say, well, and we haven't had that capitulation yet because those people that keep buying the dip haven't really gotten murdered. And I don't know if I necessarily buy into all of that. But for me personally, that's why we talk about the economic modern family, right? Because they've been my guide for so many years. And, that's, of course, talking about the small caps.
Yeah.
We're talking about retail, transportation, semiconductors, biotechnology, regional banks, and of course, our newest member, which you and I talked about a lot yesterday, which was Bitcoin, which is looking so exciting to me right now in terms of the decoupling. But if you watch the internal sectors, the inside sectors of the U.S., we'll get a real idea whether or not the tariffs in terms of the impact they're having to the consumer, for example, or to small businesses has been sort of behind us, whatever the reason is, whether people come to the table, whether Trump pulls back, or whether it just becomes yesterday's news. You know how that happens in this market. We'll know by looking at the charts of these particular family members. And right now I'm uber focused on the retail space because it was what let us down in January. And it most likely will be the sector that tells us things are okay now.
Well, let's jump into those retail stocks. XRT, for instance, just sitting down here, not far from a 52-week low. Hasn't been going down the last few days either, though, so there is a little bit of relative strength if you squint your eyes really closely at the XRT mark there. But, I mean, you break down, you look what's in the XRT, and it's all, obviously, you got Costco and you got Walmart, which have been best of breed. But then you have a lot of mess. Target's been an absolute disaster. We know the Macy's, Kohl's. Macy's gets another downgrade today from Goldman this time, I believe. Kohl's, it's just been, kind of a disaster. TJX has been the best of breed for a long time on the off-price retailers. But, I mean, XRT is not showing me a hell of a lot of life here, Mish. So what are you looking at here on it?
Well, essentially, I'm looking at two things. Number one is I'm stepping out and looking at the monthly chart. And XRT, and I mean, a lot of different indices and sectors are like this right now. But XRT in particular, since I said that's been the thing that's held my interest in terms of where we're going to start to see buying coming in terms of economic buying, not just stock buying, has held a very key area. It's the 80-month moving average, right? The only time in years and years and years that it broke that was briefly during COVID, and then it came right back through it. And so right now that level is 64, and XRT is trading at about 66. We tested it, but we held it. What that number tells me, and this is not just technical reading, but it's actually really tied to business cycles, is that in a 6 to 8 year business cycle, we are holding up in terms of whether it's weak growth or whatever. At least we're holding up from going into major recession. And so that's my line in the sand. If we can hold 64, that would be one thing. Clearly, if we can get up through 72, now we're back over some of the more short-term moving averages. And that's going to tell me that it's real. Okay. So what I might do if we can get over 66, 67, 68 in the next couple of days is start looking at different names. And of course, for me in the retail space, I still think a major trend that got hit a little bit with the recent down moves in the market has been the vanity trade. So when I looked around the board yesterday, I saw ELF, looks like it might be trying to base Etsy, AbbVie, which reports tonight, I believe. Kohl's, you just mentioned, didn't look that bad. Ulta actually has been holding up really well. So all the stocks that are sort of tied to the diet drugs and the impact on that, without getting about whether or not we think they're good or bad or whatever, there's a lot of controversy with that. Doesn't matter. I know a lot of people on them. And I did a piece actually yesterday on Viking Therapeutics, which also reports this week. I think if we start to see some kind of bounce, sustainable, at least we have a direction. And from that direction, maybe that would lead and get a lot of the anxiety to dissipate.
Hey, Mish, great to see you. And the vanity trade in a recession. I don't know. There's got to be a really catchy joke in there someplace, but you're absolutely right. Ulta's like, I was looking at the stock the other day and like, hey, it's not doing bad. ELF has been an interesting one too. So are you going into some of these areas where I know like ELF originally like got hit hard because they have exposure to tariffs? Are you going right into the eye of the storm, eye of the hurricane with some of these names and saying, hey, these are good quality names, possibly some good news is going to get these things to fly? Or I saw I believe another name that was on your list was Kroger, which is the absolute like opposite right now. People have gone into Kroger, which is at new highs because of like a safety trade, recessionary type trade. What do you think right now is like a better place to kind of position in for something to kind of change?
Well, yeah, look at that Kroger chart. I mean, that's just beautiful. And we did not buy Kroger, but let's talk about the vanity trade, right? So in terms of a recession, I mean, we know everything gets hit pretty much in a recession, but we do know a couple of things, is that people will still want to feel good about themselves. And so, and it doesn't matter, we don't even have to be gender specific. People will spend money on health and fitness and nutrition and skincare and hair care, regardless of what the economy is, unless we go into a major depression, but I don't think that's going to happen. And so if we avoid a recession, those stocks are already poised to go up. And even if we go into a recession, we could look to see after, everything drops, what happens, what's holding up. So I actually had bought Ulta and I had bought ELF. I had bought Novo Nordisk, but I'm out of all of those. I made money in ELF. I made money in Ulta. I lost a little money in Novo because it had that big gap down and I got out that day. But the point is that I took a little taste and I did it actively. So now I'm back interested again in those areas. I think I'd like to see at least a little bit of the round of the earnings in that. I said AbbVie reports tonight. That was like one of my top picks. 160 is such massive support in that stock that I want to see what happens here after that reports. I want to see what happens after Viking Therapeutics, because that's going to give me an idea of the taste people still have for these diet drugs. And then I think that's why I'm calling it vanity. Then I think I'll have a better premise for Ulta. I'd like to see it get through 380 actually. ELF is holding 50. I think that's a really good sign. But I don't need to jump in right now. No FOMO right here. As I mentioned, we need to see things settled. NASDAQ, is not that far from 19,000. Maybe it gets there. Maybe we can see the 5,400. But getting back to XRT, that's going to be key. Transportation's going to be key. And the small caps are going to be key. And that also kind of held 183 in IWM yesterday with that terrible down move in the rest of the indices. So like I said, I'm optimistic, but I'm certainly going to be cautious until I see a little bit more evidence. And of course, the interest rates also, I mean, at this point now, we can't see yields go up much higher either, because I think that would be a negative.
Yeah, I mean, maybe we should jump into the TLT just here for a second here, Mish, and cover that as well, because we're up here a little bit this morning, but we are right perilously close to 52-week lows in the TLT, not seeming to get much lift whatsoever. I don't know if this is, an indicator that the Fed may be, just kind of sitting on their hands and not doing anything, or if this is, people starting to sell everything in the U.S., including treasuries. But, the TLT going down when the equity markets are going down is something new for me. I was talking about this with you in the SDN room yesterday. I mean, this is concerning to me, to say the least. I don't like seeing, normal markets, when equity markets are falling, TLT rises because it's flight to safety. They're not using long-term treasuries as flight to safety. Thoughts there?
Well, right. I mean, this has been the war now between Trump and Powell in terms of some people think that the Fed and Trump are trying purposely to knock the market down so that the Fed is forced to lower the interest rates. And we haven't seen that happen because obviously the Fed is worried about inflation. And they have some good reasons, but also they could be a little bit, I mean, people say maybe they're too late. I don't know about too late. But, in terms of the signs of inflation, other than the gold prices, which has backed off from 3,500 this morning, we're not seeing the silver gold indicate inflation. The dollar has fallen, but it's still at 2022 lows. It's not really crashing. We're looking around at the food and the grains and the softs. They're holding, but they're not really showing us signs of inflation. Certainly oil, even though it held $60 a barrel, that's certainly not inflationary. So it's possible that once the Fed watches, just like we are all watching, then they may decide to cut the rates a little bit here, because the CPI, PPI last month was pretty good. PCE, we'll see. But doing nothing for them right now is probably exactly why we're saying we're not doing very much. It's a volatile situation that we have to see settle down.
Mish, I have a chart of gold up right now, GLD, which is selling off a little bit here in the last half hour or so. Are we at the point where gold is getting to the blow off top type phase, or what is your viewpoint here, and what do you think you should do with gold at this point?
Well, we took some profits in gold on this last rally up, and we'll have a trailing stop. I think at this point, gold has been such a technical trading vehicle for the last several years. It's rallied, based out, rallied, based out, rallied, based out. And so we've had finally somewhat of a parabolic move, and that's why people are looking for the blow off top. This is typical with commodities that will happen. I mean, if you go back to 1980, gold shot up like crazy, and then it was like the top tick, and then it drops just as fast. I don't know if we're going to see that kind of sell-off in gold right now, but I wouldn't be surprised to see it go back down, let's say, to 3,200, only if, again, everything else is supported. We see the indices flatten out a little bit, maybe rally some. We see some of those inside sectors rally out a little bit. The dollar stops free falling. Then gold might, the people speculating in gold might say, you know what, we can look elsewhere in the board, because right now gold's been the only safety play, and we know that that can change on a dime. So I would not be buying gold up here. And I'm sorry, I just want to say one last thing, and then you can ask. Gold silver ratio, I'm all about that right now. And that topping out at 104, 105, that would be interesting to me too. If that starts to break back down under, let's say, 102, that would probably mean that gold's fumes have run dry and maybe it's better for silver, but we'll see.
I was going to ask you, because you mentioned Bitcoin, and we talked a little bit about Bitcoin, and do you think it's better to play at this point? Let's just bring up, because you can see Bitcoin is now outperforming here this pre-market, and gold is coming in here. Do you think it's better to just play Bitcoin outright, or would you look at it like a derivative play like MSTR or even like a Coinbase or a HOOD here?
Well, first of all, I saw a couple of people post this morning on X the ratio between Bitcoin and gold, and they said it was breaking out. So I thought that was interesting because we had already been buying Bitcoin. So to answer your question, we didn't buy it through the coin. Actually, Dennis and I talked about this yesterday. We bought it through IBIT, which is a pure play to Bitcoin, more so than BITO, which has a higher dividend. So that's one way to look at it if you don't want to get involved with a micro strategy or what have you. I was a big trader in Coinbase for the last couple of years, and I haven't really touched it this year. I like that it held around 160. I know it broke that briefly, but it's been holding over 160. I think 180 could be an interesting test for that. MicroStrategy is so volatile. It's a great short-term trading vehicle. So if you want to just stick with with Bitcoin itself, I like IBIT because it doesn't keep you up at night. It's it's very technical. It's been breaking out. It's over 50 right now, pre-market. We bought it around 44. We took a little profit yesterday just because, we like to do a sort of a 3-to-1 ratio in terms of risk to reward. And I'm going to sit with it for now because it looks to me like Bitcoin, if it gets through 90, 95 is probably around the corner.
That's Mish Schneider. She's been coming on our show for years here, chief strategist at Market Gauge. We always appreciate all your thoughts, the Modern Family, everything here, Mish. Joel, I know, was disappointed that he couldn't be on with you here. Obviously, Joel's off this week. You're one of his favorite guests. So, Mish, we'll have you on again real soon.
Thank you, guys. Thank you so much. Have a great day.
Thanks, Mish.